Afternoon. Welcome to Halftime Report. I'm Sonia Shenoy and with me is Ekta Batra and Mangalam Malu. Things are looking pretty good for the market, you'd have to say. Up about 0.5% for the Sensex and the Nifty. The Bank Nifty is doing well, 0.5%. Yes, it's petered off a little bit from the highs, but there are lots of big things to watch out for. There's the Jackson Hole Symposium. On Monday, there's the Reliance AGM. So local and global cues galore, I'd have to say. But give and take everything, the market is holding up quite well, you'd have to say.
Hi, Sonia, Mangalam. Yes, absolutely. Hi. And, you know, we do have the GDP data for back home for Q1 FY23 next week as well. So that is something that the markets will be looking at as well. And yes, there is a base impact which is really going to benefit us. But nonetheless, what growth is looking like in an inflationary environment is something that the street will watch out for. Currently, Bank Nifty financials doing well.
All right, things looking good. So let's go across to the first corporate that we have lined up for you today. Cosmo First, that's the stock on our radar. The company's first quarter margins were under pressure due to production lines that were added by them. But importantly, let's see what the company has in terms of plans going forward. They do have strong plans for a larger part of their revenue coming in from specialty. But importantly, they're also looking to build and demerge their pet care business vertical. At what point do they do that? And for everything else for this year itself, we do have Pankaj Poddar joining us. Thanks a lot, Pankaj, for joining in. Pleasure as always speaking with you. But, if you could tell us a little about the way business has been in the second quarter so far. First quarter, everyone was talking about raw material prices being high. There had been an element of pent-up demand, etc., with an expectation of stronger demand in the second half of this year. Have you seen any of your clients go ahead and increase their orders, anticipating strong demand in the second half of this year?
Yeah, hi. The second quarter is normally good because of Diwali demand locally. But given that we are a very large presence globally, and for us, Indian market is less than 50%. So we see a lot of good demand coming from all over. We see challenges in Europe. Multiple factories are having challenges there because of power cost. So we are getting good demand from Europe, from Americas, and even Indian demand is quite robust right now.
But this power and energy costs that might hit, your industry from Europe, is it something to worry about? Or, how are you wading through that? Because costs are escalating across the board, right?
Yeah, so it's more helpful to us. Because typically what we are able to understand there is that government is trying to support the larger companies out there, and therefore some of the petrochemical companies are running, but some of the film companies have their own set of challenge. And therefore a lot of food packaging companies are actually importing films from largely India, and therefore the demand has gone up for Indian films out there, and so are the prices. So overall, we see a decent outlook in terms of the demand.
Okay. Speaking about this strong demand that you're seeing geographically, you didn't put any numbers in terms of which geographies would you probably see most growth, and as how much would you probably see? Can you give us some numbers, maybe even a percentage figure in terms of what you're anticipating for FY23, the biggest growth drivers geographically, and how much?
Yes, so see, demand is growing because of multiple factors. One itself is packaged food and other things which where the film is used. Overall, it's growing. The second thing is BOPP is a much better recyclable material, and therefore the BOPP is being preferred over some of its other products, similar kind of
sure,
products.
Pankaj, those are
third is
those are the demand drivers. Yeah, we want the numbers.
So in terms of numbers, the BOPP India by far is the best region where we feel that demand is growing anywhere between 11-12% to 15%. Obviously, there's timing factor for month to month. And global demand also, which used to be 4.5%, is clearly growing at 5.5 to 6%.
All right. And, the second half of this year, you do have the adhesives business coming on stream as well. How is the CapEx panning out there? Is it on time? And what is the initial revenue expected to be from that business?
So it's a very complementary business to our films because the segments where we are present, we are coming in adhesives in the similar segment. The capex is already done for that, and it's just a matter of time. Hopefully, from October onwards, we'll start the adhesive business. And obviously, it takes initially some time because you need to take the customer approvals, and at times it's a 3 to 4 month process. This year, we do feel that the initial process will start and we will get some revenues this year, but it should scale up very significantly next year. So this year projection is close to, I would say, just 15-20 crores, because there'll be a lot of time in terms of approvals. But next year, we should clearly looking at least 3 to 4 times growth in terms of our revenue numbers. And a year thereafter, again, there should be a very significant growth when it comes to adhesive sales.
Oh, 3 to 4 times growth. So I didn't understand that. You're sitting on a base of around 3,000 crores as far as FY22 revenues are concerned. By end of FY23 and then FY24, what kind of numbers are you looking at?
No, sorry, I'm just talking about adhesive numbers.
Okay.
As far as the overall company or a group is concerned, we are talking about 10% growth this year and another 10% growth next year. And a year thereafter, we should see a bit more growth. We had given earlier projections that our revenue should easily grow by 50 to 60% by FY26 from the current levels. But the question was very specific to adhesives, and adhesives this year we should do 10 to 15 crores this year being the start of the year, and the adhesive business should become 3 to 4 times next year.
Okay. Mr. Poddar, I'm also interested in knowing more about your pet care segment, because that seems to be a segment which is seeing a lot of traction across companies. Companies are looking to invest within that space. Tell us about how much have you generated in terms of revenues, how much are you projecting in FY23, and is it significant enough for you to probably demerge it and look at maybe investors coming through a possible listing in the future?
So, see, we would ideally like to scale it up to larger numbers before we demerge it. We had earlier projected FY25, and we are pretty much looking to do it in FY25. As far as the monthly numbers are concerned, we did around 60 lakh sales monthly last month, and we're growing month over month at 23%. We have already, launched our website. The Android version of the app is also launched for some products and some services. The iOS version should be launched in next quarter as such. And we are going to become the entire ecosystem when it comes to product and services. And we are looking forward to open at least 15 stores by the end of this year. And next year, again, we would like to scale it up. We would like to open more stores than this year. And hopefully by the end of FY24, we should be easily having 35 to 40 stores.
All right, take that point. Ziggly is doing extremely well. Final question from my end. Then, you target 80% of your revenue coming in from specialty films, etc., which is margin accretive. But I wanted to understand, how do you plan to sustain this? Because, I mean, specialty for certain period is specialty, thereafter it becomes a commodity. So how does it stay margin accretive for a longer period of time? Can you give us a sense of that?
So we do a quarterly review in the company. We have categorized our films into 3 categories: specialty, semi-specialty, and commodity. Wherever we find that there are, let's say, more suppliers coming up, and the margins are coming below a certain threshold, then we shift that to semi-specialty or a commodity. So it's a quarterly review. It's not something we have a big chunk of different kind of specialty films.
Yeah.
And what we are clearly seeing is that 65% of our revenue, where there is no impact to the market, where the market goes up or down, our margins remain stable because they're all raw material linked contracts, while the 35% is still linked to the dynamics of the market, where if the prices goes up and down based on demand
and
supply.
what are those thresholds? What are those thresholds for defining commodities, semi-specialty and specialty?
It's a bit internal, but in general, we see anything above 50 per kg goes to specialty, and anything little below that goes to a semi-specialty, and the rest goes into commodity films.
Okay, all right, we leave it at that. Thanks a lot for joining us, and all the best for the quarter.